Welcome back, everyone. We have an update from Citizens Inc. Trades on the New York Stock Exchange under the symbol CIA. It's a diversified financial services company providing life, living benefits, and final expense insurance and other financial products to individuals and small businesses in the U.S., Latin America, and Asia. Please welcome President CEO John Stenberg and CFO Jeff Conklin. Nice to see you guys at the conference. We're happy to hear your update.
Thank you. Well, thanks, Anna, and thank you, everyone, for joining. We don't have a lot of time here, so I think I'm going to just jump in, and I'm going to focus a little bit about who we are for those of you who are new to us, and what we do, and then a little bit about how we're doing and where we're going, and then I'll open it up to some questions. So we're a life insurance company, which is really exciting, obvious to a lot of you. We have the coolest stock ticker that you won't be able to forget, CIA, and we are really an interesting company, unique in the family of life insurance companies that are based in the United States. Traditionally, we get most of our premium from overseas. We're closing at about 250 employees. We have policyholders in over 75 countries. If you look at this global map here, you're going to see dots in Texas. That's where Jeff and I are located in today. This is our corporate headquarters here in Austin, Texas. Any of you are very welcome to come here and visit us. We'll give you a tour and tell you more about us. We've got a dot in Puerto Rico. We have an operation there. There's a dot in South America and a dot on Taiwan because we get a lot of business from South America and we get a lot of business from Taiwan. You can see in the circle on the right there that we get business from Colombia, Venezuela, Ecuador, and others in South America. And then we get a bunch of great quality business out of Taiwan. The interesting thing I would say about us, though, is that we are an American-based company that gets all this premium internationally. What about our American business? Well, traditionally, it's been about 30% of our overall premium, our overall sales. But last year, in 2024, what you're not seeing on this page is our new sales. So when you're a life insurance company, you talk about premium revenue, it's not just new sales, but it's the renewal premiums from last year. It's the renewal premiums from 2 years ago, all the way back to we've got policies as up to over 40 years old. So you're getting all these years of renewal premiums. That's your overall premium revenue. So that's how you want to differentiate between premium and sales. Well, our sales last year were actually 70% from the United States and 30% roughly internationally. And we had a great year internationally. It wasn't because we were down internationally. We're actually well up internationally. But we had an incredible year domestically here in the United States. And that's because we entered a brand new market after a lot of thought and work and research and building the products and systems and really listening to what agents and agencies wanted and thinking through how we could outmaneuver our competition. And we did just that. And we sold, rather than the $12 million we expected, we sold well over $30 million. So we had a really great year in the United States, and I'll cover some of that. Real quick, before we get off this slide, you can see we're sizable in our level of assets. We have over $5 billion in coverage in force, and we get about $173 million each year in total revenue. And that number will be climbing in the future. So let's go and touch a little bit on how we're doing. So we issued more business last year than we ever have in our history. We're over 50 years history in our company. So to get this kind of growth, we up 54% in face amount issued for a 50-year-old company is really unheard of. This is my 36th year in this business, life insurance. I've never seen a 50-year-old company get that kind of growth in 1 year. So I think I'll also touch upon our international business. We were up 16% in sales, which is just an incredible year. And in terms of the number of producing agents, we were up 72% year over year. So just a knock the ball out of the park last year in terms of sales. And what that will do as those sales turn into renewal years in 2025, 26, and 27, and we have good sales on 25, it'll also build, we're going to start seeing a steady growth in overall premium revenue. And that will lead to increased earnings per share, obviously. All right. So very quickly, in 2025, what are our priorities? Well, we have this great new line of business, final expense here in the United States. A lot of our focus this year is what I call continuing to build the factory. So build out all the accoutrement and all the connective tissue to make sure that that business is profitable, it's quality business, that we are able to serve those clients and those agents in the way that they deserve, and really make that business a earnings engine for our future. Well, while we're doing that, we also want to make sure we grow internationally. And so we're sowing the seeds for international growth at the same time here in 2025, and that'll lead to great growth in the future. So our stock price, we just looked at it before we got on the call. So our 1-year return is over 100%. So we're having a good run on with the stock, but we still think it's a good value. So it's at 4 and change right now, and I think that it's still kind of getting in on the ground level of what really internal, if you work here, feels like a 50-year-old startup, because the energy and excitement here of our growth is really contagious. We're having such a great year already in 2025. So I tried to do that as quickly as possible so we get to some questions. So Jeff, if you want to add anything, or if Anna, you want to go to some questions, we're happy to field any questions.
I think I just wanted to add one more thing. Is something that we did not hit as our 2024 goals was for the first time in 7 years we had premium income growth. We've been focused on that strategically now for 3 years, and for the first time in 7, we finally started growing that premium revenue, and that's what John's referred to earlier about getting into the domestic business, and then continue to focus on first-year sales, which will then become renewal year and continue that growth. Thanks. Sorry, Anna.
You're fine, Jeff. Talk a little bit more about that. What are your most important drivers of growth domestically and internationally?
All right, great question. So if you look domestically in the United States, and I should also say, I think my long-term goal for the company is to have eventually 50% of our premium revenues come domestically from the United States and 50% internationally. And right now it's closer to 35-65 or 30-70 domestic international. So as we're growing in the United States so quickly, that'll eventually balance, but we'll also need to look to grow internationally to keep that balance in the future. Why do I want to do that? Because if you look at a life insurance company in the United States, highly regulated, very stable environment, the investor would think of safety. That's kind of the safe part. But the growth engine is really in the future and long term, it's international. So it gives you safety and growth together, which is the dream of any investor, right? So, and you asked what our growth engine is domestically and international. I would say our growth engine is our final expense business. We have also a debit business. I won't get into but that's now kind of much smaller than our domestic final expense. We have a very compelling offering. We actually listen to agents and agency as of what they need to make their day easier, to make their sales process easier, and they gave them just that. And so agents have been flocking to us. And last year we actually had to hold them at bay a little bit because you can only onboard so many agents at a time. We grew from 1,000 agents to 8,000 agents within a year and a half. That's a lot of growth. So you want to make sure you do that properly. We also offer white labeling, which is really unique. It's a very unique offering in the United States. Our best agency partners can, if they want, not all do, can get a product. Yes, we underwrite it, we service it, we administer it, and we pay the claims, but it has their name of choice on it, and that agency is the only one that can sell that product. And it makes their agents very loyal to them because they build that brand recognition within an agent. And if they go to another agency, they can't get that product. So that's a really interesting thing we're doing domestically, and a big part of what's driving our business. 60% of our business comes from white label domestically now. Internationally, we made the decision to commit to our current partners. We were starting to add some brokers, this and that, but we actually have amazing partners in South America and Asia. And we thought they had a lot more potential. We recommitted to them, and they delivered a great year, and they're going to deliver another great year this year. And then the next part of our international growth is now geographic. There are some really amazing opportunities there that we're not seizing. And the way we grow internationally, we don't have to do brick and mortar. So it's very low fixed costs for us to go into to originate business in new countries. For example, El Salvador, it has a high shortage of life insurance companies because it's not a place that a life insurance company would want to be. So we want to fill that vacuum. Belize, awash in U.S. retiree dollars. Brazil. So these other places that we really have a ton of opportunity in addition to the countries we're in now.
Thank you for that answer. A quick question from Cal asking, what's your renewal conversion? How many year one sales renew the following year?
That's a good question. And the question to that is really dependent on the line of business. So for example, at the high end, our endowment sales in Taiwan renew at, well into the 90s. It's just really great, sticky business, and you price for that. On the other end of the spectrum would be final expense. That business, because a lot of these folks have affordability challenges, your renewal conversion rate is lower, and you price for that. You design the product for that lower level. So we're aiming for about 72% conversion first to second year, and then it tends to go up from there. If you can get them to the second year, it tends to be stickier in subsequent years. And again, we price for that higher level of lapse. Good question.
Right, perfect. Yeah, well, we have more questions like that, but we're out of time. So that just means Please come back for a longer form discussion, hopefully next month or the following months. We love to follow your story.
Thanks, Anna. We're having a great time. Thank you, everybody.
Thank you.
All right. Thank you both. Everyone, we'll be right back.